Hello and welcome to Business Today. You're watching our Market Masters live with one of the biggest and most well-known names in the investment community, one of the biggest gurus in the space, Madhusudan Kela. Warm welcome to Market Today. Very good to have you just after the budget to dissect what the budget means for our market's trajectory.
Yeah. Siddharth, good morning and so nice to see you. It's been long that I've not interacted with you. So thank you for having me. Really appreciate you reaching out. Uh,
Thank you very much. Otherwise, I want to start straight away with that big question that has been weighing on most market participants. In the last few months, we have seen a pull-out and consequent downtrend in the markets. But with a budget, which is a solid budget, is it time for investors to resume their long-term investment journey and put all the recent negatives behind them?
so, Siddharth, we have to understand the backdrop of this market. From the lows which we made in 2020, markets have given really extraordinary return. A lot of people investing like me on individual companies. You have had companies go up 10 times, 20 times, 30 times. A lot of these small and mid cap companies, and a lot of money is being made in the last 4 years. So this correction is in that backdrop that if you continue to compound your money at 25, 30, 35%, then there is something wrong with the business people who are establishing these businesses and are struggling to make 18, 20% ROE. And as investment community, we can buy their derivative and we can compound at 30, 35%. So that is like unreal, but it happens in the market because market is not always fundamentally driven. It is driven by greed and fear, right? So obviously, a lot of greed has got crept into the market in the last 12 months, I would say specifically. You would have experienced it yourself that everyone wants to do a family office, a lot of people want to do AIF, and everyone wants to be part of the stock market. So I think it is in that backdrop that this fall has come. What I would say, Siddharth, that at this point of time, it is important to understand that these returns are not replicable over the next 3-4 years. As long as, and so you have to moderate your expectation. If you extrapolate that and come to market that XYZ made 35% CAGR or 40% CAGR in the last 4 years, and it is likely to happen, I will clearly say very unlikely to happen. That kind of extrapolation of return. So that's point number one. Point number two, does equity still remain a good asset class to play in, given your alternatives? So if you are looking for asset allocation and given the long-term India story, which I am very, very convinced about even from here on, equity still remains a very good asset class with moderate return expectation, right? Third point. Now, how do you play this? So there are phases when for doing nothing, you make a lot of money in the market, basically just on sitting. And there are phases when you have to work really hard. I would say we are getting into a phase when you have to work really hard. And market will not make you money, but your individual stock picking and your bottom-up ideas, they are the ones which will make money. So that's, we live in a very volatile world, right? And you have to make volatility as your friend in these markets. Do your homework. There is no need to go and buy companies at any price. You have to have faith that markets are going to have volatile. And if your homework is ready, you get excellent entry opportunity. So I would say bottom up investing for this year with moderate return expectation is what I would vouch for. And lastly, Siddharth, I would not, including my own self, I would not give extraordinary credit to myself that I was some real, killer investor who identified something and made so much money. We have been part of the bull market. So whatever we have made, We have to preserve that, you know. And if we have that mindset that yes, majority of the gains we'll be able to preserve and make moderate return over the next 12, 24 months, it will be a very good outcome for a 5, 6 year time frame.
Several headline words, rewords from Mr. Kela's first answer. Be prepared for volatility, work very hard, moderate your expectations over the next 18 to 24 months. One more point on the macro, and this is to do with the global situation. We are having this conversation literally hours after US has begun a tariff war. Retaliation has also started. Uh, how will the global context feed into our markets, both sentiment and flow wise, Mr. Kela?
So global sentiment is what actually even feeding today, Siddharth. If you look at, foreigners have been relentless seller in the market from October onwards. They have sold close to 2.5 lakh crores. The number which we have not heard from October, I'm saying September, October till now. So it's been a lot of. It has nothing to do with their view on India. It has got to do with their view on overall emerging market. So they lost a lot of money in Russia. They lost a lot of money in China, and the money is going away from emerging market because of the strength in dollar. So if you are like a pension fund who are getting 5% in US fixed income, like Treasury is giving you 5%, and if you have to meet obligation in US dollar term, then you're more tilted to be at home and invest into US. And that is what has played out in the last 4, 6 months. I would say that trade, Siddharth, actually has gone far too tilted in favor of US. US is today 75% of the overall global markets in the world. And this kind of tilt can't last again forever. So I would say that, foreigners should return to our markets sometime this year. And I expect that, foreign selling, which is, I call it relentless, should subside at some point of time during this year.
Madhu,
And
what is likely?
just reacting to your comment on trade wars. See, trade wars are never good. Certainly not for the global setup. The more liberalized the world you live in, it is better for the capitalist society. But they are here. We can't, they are here for geopolitical reasons. They are here, and it is loud and clear. The question, Siddharth, is how does India position itself? So there, I would go to the extent of saying that we have an extremely smart businessman in the form of Modi ji. He will make sure that India's interests are protected. And that is what we have done till now. That, even though there is a mention of India in Trump's speech, there is nothing negative which is being done for India. So if you look at the tariffs which were being imposed in China in Trump 1 era, that actually led to a lot of good for Indian economy. People started talking about a China plus one, and some of the businesses have started getting some momentum in into India, some specific industries as well. So my point is that this actually eventually could turn out to be a good deal for India if we manage this situation well over the next one month, and if we can create some kind of a win-win situation with the US. Let's say, for instance, if they want 18,000 illegal immigrants which are living in America to be brought back to India, and that is the demand. It's not a large demand for which we must face tariff. I'm just giving as an example. So $1.4 trillion worth of trade has got disrupted. The moot question to ask for is there any specific sector or company in India which can benefit out of it? And I would say there will be certainly companies which will be able to fill part of this gap and will benefit out of this. So it's not good word.
Madhu, to your mind, which are those sectors that might be beneficiaries as you just outlined for us?
Siddharth, we are getting into more details, but as of now, it looks like some chemical companies, some agrochemical companies, which have a larger base worldwide also. And some of these stocks have not done well in the last 3-4 years because the cycle was bad. But we are still, putting our head together. It's only been 24 hours. But my say the larger communication, Siddharth, is that this thing is here to stay. What was being put in China, even in Trump 1, even in a 4 year of Biden administration, it did not get reversed. And Mr. Trump is back again. So these tariffs and trade situation, they don't go in a flip-flop situation. Right? So I think this is here to stay. It will disrupt the global economy. It will disrupt the global trade. It will disrupt the global supply chain for sure. And that is not a good news on a macro basis. I am only saying the relative positioning of India is at a sweet spot, and we could potentially, in the medium to long term, actually benefit out of this situation.
Since you speak about sweet spot, Madhu, I just want to ask you, this global sell-off that has happened on account of these tariffs, India has already corrected. Can it get worse from here, and should investors be prepared for a short-term impact?
It is always possible, Siddharth. Foreigners hold $900 billion in India. They have sold $30 billion. So basically, only 3%. If you look at from the overall holding, can they sell another 3% if there is a real global turmoil in the world? It is entirely possible, and certainly you and I can't take that call, and we should not take that call, right? Because how the globe is going to behave, how each one's portfolio will get impacted, and what you would need to get out is are the larger questions. All I am saying is that how do I deal with it as an investor? I can only say that I will tighten my belt more. I'll tighten my grip on my companies even more. I will put in tremendous amount of work, and market will provide volatility, and it will provide us excellent entry point to own companies for a longer term, from a long term perspective. That is what is in my hand, and that is what I would suggest investors should do.
Coming Friday is another pivotal moment for our markets. But what has happened to the rupee? It has breached 87, and perhaps that might continue. Amid the hands of the RBI and this expectation of the tax stimulus being followed by a monetary cut, is that scenario changed now, Mr. Kela?
Again, it will depend, Siddharth, on the globally how dollar behaves. If DXY index is 109, and if it continues to strengthen, that will definitely mean that rupee will weaken, right? But if the DXY stabilizes here, and you have had a unusually strong rupee, I would say maybe 3 months back, because RBI was clearly intervening and they were defending the currency, and rupee was maybe the second or the third largest, third best currency in the world just 6 months back. So this, and if you look at what has happened to Chinese currency versus what has happened to rupee, it's not that bad. So this depreciation actually is come on expected lines, and if dollar continues to strengthen, can it weaken a little more further? It can.
What is the likely impact of the tax stimulus? There is a debate going on whether it will get spent and the impact on consumption stocks. I wonder if you have already taken a view on this.
Siddharth, actually, just coming to the budget, but in the normal circumstances, I have been watching market for more than 30 years. Actually, it is a good budget. It makes perfect headlines that you have given 1 lakh crore rupees in the hands of consumer, and that was the class which was feeling most hurt because of job losses and also because of the impact of inflation. You have done a very good capex, because what people are looking is only central government capex. If I include the grant which is being given to state government, the overall capex growth is 15-16%. right? And including the capex which will be done by the state government. You have done both of this while keeping the fiscal discipline, again, which is better than what the market would have expected at 4.4%. 12 months down the line, if we get through to these numbers, I think it would be an extraordinary achievement in these circumstances. And
Madhu,
no wonder a lot of very, very good economists are calling the impact of the budget on the overall GDP will be anywhere between zero point 0.5 to even the most bullish guys going up to 1.5% of GDP. So this is clearly a very, very good budget from a India perspective. And one more thing, Siddharth, I am sure you have had a chance to look at final details. One is the headline number, and the other is the number of issues which the government has addressed. Let's say, for instance, ease of doing business, decriminalization of offences. So we have already done away with 180, and they want to do away with 100 more. Looking at specific sectors, what they've done for toy industry, what they've done for leather industry, what they've done for extending credit to MSME and SME sector, right? What they've done for national manufacturing mission. So what they've done to promote solar power. So there are a lot of very good final details, and it will all add up over a period of time. So if I was very happy, honestly, market is by one side, but for India it's a very, very good thing.
Madhu, what sectors are you now overweight following this budget, and what sectors would you classify as those being avoidable?
So Siddharth bhai, we have always avoided high valuation. I have not been a big fan of paying very high valuation. We continue to have that theme, and this is the correction which you are seeing. So Siddharth, I'll just tell you from a market perspective, the biggest pain point are companies which are classified by SEBI between 101 to 250. That is like larger mid-cap names. That is where, at least to me, the maximum amount of discomfort in terms of valuation is there, right? Because those are the center point of all small cap funds, mid cap funds, and large cap funds. So I would surely avoid anything which is very highly valued compared to the growth it offers. And I will tilt more towards buying value, which has not been in favor for last 3-4 years. So the value may be in large cap companies, it may be in smaller or mid cap companies. But my tilt will be more towards buying value, and it will be more towards bottom up rather than backing any big theme at this point of time. So there will be bottom up opportunities, and again, once again, I want to repeat this, that this market volatility gives you excellent opportunity to enter these companies, wherein your work is ready on the more specifically on a smaller and mid cap segment.
Since you mentioned this word about the theme, I'm just wondering, do you think the capex and infra theme will continue to have a certain amount of play?
It will continue to have. Markets have become very nervous looking at the headline number. But let's not forget, a lot of these stocks have corrected anywhere between 30 to 50% from their peak. So at some point of time, they will offer risk adjusted value. So I would not write them off as the market is writing them off today.
Okay, one more point, and this is to do with the fundamental of any sort of earnings growth. What is your outlook as far as earnings growth is concerned for the current financial year? What can investors look forward to?
Earning growth rate should pick up in the second half of 2025-26, Siddharth, because obviously earning growth has been a challenge, and see that is the only thing which the market is reflecting. If earnings were fine, I don't think we would have had this kind of correction. But because the first 6 months the capex was slow, because of the election also, and there was a general slowdown in the overall corporate sector. I expect that to pick up in the second half. of 2025-26. And Nifty today is trading roughly at 18 times, give or take few points here or there, which is lower than the last 10-year weighted average of valuation. And by no stretch of imagination, you can say that these are frothy valuations.
Okay, that's a very important comment about the Nifty. One final point that I want to ask you, and because we saw this 4-month consolidation, the broader point you spoke about what FIIs could do, but in your estimation, is there a point in time that you foresee FIIs coming back to the Indian market?
I think they should come back. That trade which that is what I am telling you, that the trade which is really heavily tilted, and US has now become 75% of the world market cap. It's not a small number. So at some point of time, maybe in this year, we will see FIIs really coming back. But it's very hard to comment whether it will happen in the next 30 days or 60 days. But I would be optimistic. But you can't ignore the real long-term potential of India. So I'd be optimistic. But let's see how the market behaves, Siddharth. In the next 30, 60 days are very critical, even from a global market perspective and from a sentiment perspective. So I don't expect it to get resumed immediately, but I'll be hopeful that some point of time during the year, FIIs will come back.
Those are good words of wisdom, Mr. Kela. Put your head down, ignore the volatility, stay true to the fundamentals of investing. That's the message that I pick up from you at this stage. Thank you very much for your time with us today to dissect and give us a market outlook. Hope to connect with you again after 30, 60 days when things perhaps settle down. Once again, thanks very much. With that, it's a wrap on this episode of Market Masters. Viewers, we'll slip into a short break and come back with more programming on the other side. Do stay tuned in.
नैना लखित भाई हमारे साथ जुड़ चुकी हैं बजट का फाइन प्रिंट और उसका रिएक्शन लेने के लिए। नैना, थैंक यू सो मच हमसे बात करने के लिए। पहला सवाल ये कि सबसे बड़ी खबर तो आई 12 लाख वाले इनकम टैक्स स्लैब की। आपके हिसाब से कितनी बचत एक आम आदमी को होगी, उसकी जेब पर होगी, और क्या इम्पैक्ट आप देखती हैं मैम?
फाइनेंस मिनिस्टर ने तो वैसे अनाउंस तो किया है कि 80,000 रुपीज़ बेनिफिट लोएस्ट